Illustration 4. PQR Limited has furnished the following data for 2 years sales for 21-22 and 22-23. Sales 8 lakh and here it is unknown. Profit volume ratio 50% and 37.5%. Margin of safety as a percentage of total sales is 40% and 21.875%. There have been substantial savings in the fixed cost in the year 22-23 due to the restructuring process. The company could maintain its sales quantity level of 21-22 in the 22-23 by reducing the selling price. You are required to calculate the following: sales for 22-23 in value, fixed cost for 22-23 in value, and break-even sales for 22-23 in value. So see that we haven't given the sales, but the profit volume ratio and the margin of safety is given. And also they have said that the company could maintain its sales quantity level. If the company could maintain the sales quantity level, what factor will remain the same in both years? Sales quantity level is maintained, so the variable cost will remain the same for both the years. We can find the variable cost for both the years. Let's see the answer. For the year 21-22, we have given the PV ratio is equal to contribution by sales. PV ratio for 21-22 is what? PV ratio is 50%. Sales is 8 lakh. So 50% is equal to contribution by 8 lakh. From here we can find the contribution is equal to 8 lakh into 50%. That is, contribution is 4 lakh, right? So we can find the variable cost. The variable cost, sales minus variable cost is contribution. The sales here is 8 lakh given in the question, and contribution we found out 4 lakh, and the variable cost will be the balancing figure 4 lakh. So this variable cost will remain the same in both the year. Why? Because the sales quantity remains the same. Since the sales quantity remains the same, the variable cost per unit also will remain the same for both the year. So here the variable cost is 4 lakh, and in year 22-23 also the variable cost will be 4 lakh. And we can find the variable cost ratio also, right? Variable cost ratio is 100% minus PV ratio. The PV ratio is given in the question. PV ratio is given in the question as 37.5%. When PV ratio is given, we can directly find the variable cost ratio. Variable cost ratio is 100% minus 37.5%, that is 62.5%. Variable cost ratio is also given. So we can find the sales. Sales is equal to variable cost divided by variable cost ratio. Since 62.5% of sales is variable cost, the sales is equal to variable cost by variable cost ratio. 4 lakh divided by 62.5%, that is 6,40,000 will be the sales for the year 22-23. And they have also asked the fixed cost for 22-23 and break-even sales for 22-23. First, it's fixed cost and break-even sales. Let's first find break-even sales. When the margin of safety is given and we need to find the break-even sales, there is a simple relationship like how we find PV ratio and variable cost ratio. Here also break-even sales will be 100% minus margin of safety ratio. So break-even sales ratio is equal to 100% minus margin of safety ratio. 100% minus what is margin of safety? Margin of safety is equal to 21.875%. So break-even sales ratio is 78.125%. So we can find the break-even sales value. Sales into break-even sales percentage. The sales in 22-23 is 6,40,000. So 6,40,000 into 78.125% is 5 lakh as the break-even sale. Break-even sales value for 22-23 is also find out. Now we have to find the fixed cost. We know the formula. Another formula for break-even sales value. Break-even sales value formula is fixed cost by PV ratio. Break-even sales value is fixed cost by PV ratio. So break-even sales 5 lakh, fixed cost unknown, PV ratio is given in the question as what? 37.5%. So 37.5%. Fixed cost will be 5 lakh into 37.5%, 1,87,500. So hope it is clear.